everyone, John Ray here, slingshotfutures.com, and welcome to the Daily Futures Market Outlook, where we take a look at our Big Six markets to formulate an attack method or a plan for tomorrow's price action, given what the markets are telling us today. Now, as expected, we were kind of anticipating today to be a little bit slower, but we did have some news that came out, both expected news and unexpected news, that kind of caused the markets to bump around a little bit and just make them generally a little bit kind of oddballish. So, you know, a lot of traders, I'm sure, had a little bit of a difficult time pinning the movement down today, but for the most part, as long as you stuck to the plan and followed along with the trend, you probably did okay. Now, before we jump into the charts and all that fun stuff, make sure to swing on over to slingshotfutures.com, scroll down and click on the Join the Daily Outlook newsletter. That's where we're going to talk about this video that you're watching right now, and that's going to be in there so you're notified every single time that it comes out. But along with that, we talk about different cryptocurrencies and stocks and Forex and all kinds of different statistics as well to keep things interesting. So very good newsletter to have your get your hands on, rather. And then along with that, at the bottom of the page, don't forget to check out every morning our live Trade Your Morning prep levels, along with the daily psychology video or trade of the day video, depending on the day itself and how everything was going. All of that can be found right at the bottom of the page. And we also post different articles like we have here, long-term investing, diversification on cryptocurrencies. So all kinds of good stuff at the bottom of the page there as well. If you haven't done so already, make sure to click on the live trade room subscription and trial info. From there, you can sign up for a one-day trial to see what we're all about, and if you really enjoy it, you can sign up for a weekly or monthly subscription, and of course, if you join as a VIP member, you get the live trade room as part of the package, so you never have to worry about spending anything ever again. Now, looking at the overall movement today, the Bund had a beautiful start to the day, very bearish right from the get-go, and ever since probably around 3 o'clock or so, really didn't go much further. Took back most of this, in fact. So given that big pullback that we caught kind of going into the overnight session, into the US session rather, really didn't get any continuation to the downside. The sellers got one more leg down here, never came back. So overall, we're kind of stuck in this little bit of a range that we have going on for the past several hours, and with a slight bullish trend. Now, overall, it's really tough to say, yeah, I really want to be a buyer here, because we do still have the overall bear trend over the past several days. You know, maybe if we go back far enough, we could find a bull trend, but right now, it's bearish. So if anything, I'm looking at this thinking, well, you know, the bigger picture may just be looking for a potential type of pullback or a retracement in this case, looking for better prices for sellers. And that may mean that we have to come up to 160.53. It may mean that they have to go even higher, back up into the 161s. So this area, a little bit of a precarious location, right? I mean, especially when we zoom out, we can see that we've been down for quite a while. The bears have been pushing, and they're not giving much of a break for the buyers to get anything going, other than maybe some small profit-taking rallies. So we're due for a correction, but again, being due for a correction doesn't mean that it's going to happen anytime soon. It could be a month from now. So overall, we're still bearish in the bigger picture, but we know that we need to be looking for better prices, and that means at 160.53, maybe even further above that, are the areas that we want to look for potential areas of interest, right? Looking for selling pressure. So overall, we do want to be a seller, but until we get up around that 160.53, maybe in the 160.50s, you know, that area, it's going to be tough to want to do anything but sit on hands. On the euro, we have a little bit more continuation to the downside, right? It looks a little bit better than what we see on the Bund. Good bearish momentum to the downside. We have the bears controlling the day pretty much since the start. A little bit range bound in the morning session there. But overall, it's pretty clear who owned the market today. Now, if we zoom out, once again, getting the bigger picture, we can see that, well, you know, although we do have a very nice couple days of bearishness, going backward a little bit here, we're just kind of finding ourselves right back in that same range we've been in for a really long time. They tried to break out above it and rolled back over and fell back down into it. So we're back at the range, unfortunately, and, well, we're kind of stuck in the middle. Now, if we zoom out a little bit to like a 60-minute chart, we can see that even better, where we're kind of cycling back down towards the lows. That was that attempted breakout of the highs. It failed. Now cycling back down, we're looking for potential support with a little bit more oomph to the downside before we start finding the buyers really gaining some interest. Now, there could be some short-term support right around here, which is where we are right now, and that would explain a lot of what we're seeing on the 5-minute chart. If we zoom in a little bit, we can see that drastic failure at the bottom, and that looks very indicative of exhaustion. The sellers pushed down so aggressively that they just ran out of steam, and given that it's right at an area of 60-minute support, it kind of makes sense. So we are getting a little bit of an attempted bullish correction here. I don't want to pull the trigger on the buy side yet. I don't think there's a strong enough reason to, but we do have a reason to believe that there may be at least a short-term correction. So I'm looking to sell, but at better prices. 90.19 up to 91.22 are the areas that I'm looking for to begin selling, and we may even, we may get a rally right back up to that news bump that we had at 1 o'clock. So definitely a lot of areas of interest in here, but unfortunately, it's another market that we're going to have to sit on hands until we get some better movement. Well, not necessarily better movement, but better location. And then we have gold. Gold also continuing to the downside, very aggressively bearish overall. We kind of ended the move down with a 3-push wedge bottom, a perfect test on every single one of them all the way across. And we also have a very nice looking top. We broke out above it, very small little 1-candle pullback, and they ripped higher. Now, this rally to the upside, does that mean that the sellers are completely given up and they're out of the way and we should just be going up for the next week? Not necessarily, right? This could just be a break. The buyers have a pretty big, wow, look at that spike that just showed up. The buyers have a good emphasis to believe that, I wasn't expecting that 5-minute candle. Sorry, taken off guard by that one right there. That all happened in a couple seconds. You'll have to rewind the video if you missed that one. That was a very fast pop higher. So obviously some news or maybe something hitting there, but generally speaking, this is just a chance for the sellers to get better prices. This area up here is where we anticipate sellers to want to come in at. 1220.6 is the aggressive area, 22 even is the next one, and now that we have this massive spike higher, 24 even also hit. So a big spike to the upside in this otherwise beautifully bearish trend. We're popping back up. We're retesting the earlier area of resistance. Notice where it fell off of. All on that 5-minute candle coming right back down again. In my opinion, this is where the sellers are loading back up again. So I'm definitely looking to sell here. May even look at something once this video's done. So possible area of selling right up in top here. So let me post that to our chat room members really quick. All right, there we go. So that's going to fill a lot of the sellers to the downside who have been waiting for a while to get in on this, and that will have filled a lot of them. That was a very fast spike higher. So definitely looking for the sell side and heavily sell weighted to continue that bear trend. Looking over on the bonds, man, the bonds have been an absolute waste of time over the past couple days. It just seems like they don't want to go anywhere. The spikes that they get going are right around the open at 820, and then it just dies off again for the next, the rest of the day. I was going to say the next couple bars, but let's be realistic here. For the rest of the day, and then it just goes nowhere. So that kind of momentum, or lack thereof, is really nerve-wracking. That's not the kind of market that I want to be playing with. I want a market that's at least moving a little bit, and this just isn't the environment that you want to find yourself in. So we may have to sit on hands for the bonds for a little while, but this could just be the aftermath of that big spike lower. It does make sense. Whenever you have a big move like that, generally the market wants to go range bound for a little while, but you'd expect at least a little bit more distance on it. Right now, we've got a lot of chop. We were even getting some comments in our live trade room where, is my chart broken? What's up with all these dojis? Well, no, that's just the bonds right now. It's a mess. So if anything, looking for, a better price to sell. If anything, sellers are likely looking for an area of resistance coming across the top, whether you draw it a little bit more aggressively or a little more shallow. Either way, we need a better price to sell, and until we get that, it's going to be really tough to want to do anything else but sit on hands. And it looks like all of the other market participants are doing the same thing, or they're taking a nap, one of the two. But either way, we're just on a holding pattern for the bonds. Looking at crude oil, slight exhaustion on the downside. We had a beautiful move down most of the day. They tried getting a bull rally and it fell apart. Nice little spike higher there and gave it all back and continued that down move. We have a 3-push wedge bottom that blew off the lows, and after that move down, we failed all the way back up, and that's a good sign of potential reversal, or is the short-term correction back up. Now, we are nearing the area of resistance with falling resistance kind of coming down upon us, but we also have the larger area going through these highs here, and that could be a little bit further up. Given the blow-off that we had through the lows, it wouldn't be much of a surprise to see it go up to that next area of resistance, and we could find ourselves in that 46.20 mark for possible selling. So we do have a sell area just ahead of us right off of the top of this little wedge channel top here, but it might be a little bit nicer to wait for a better price. Now, sometimes when you wait for that better price, you may not end up getting a trade, but that does mean that you're taking the most conservative entry at the very least. And given that big blow off on the bottom, I would really like to see a little bit of a correction. So looking to sell, but preferably at a higher price at the top of the larger channel rather than the smaller. And then finally, we have the S&P 500 forming a little bit of an expanding megaphone bearish wedge, kind of, right? A little bit of an oddball one. We have the highs coming across the top, and we have the lows expanding outward, and both of them are testing. We have a reason to believe both of these. That held really well, held really well, held really well. There's no reason to believe anything but. So right now, we're bear weighted in the short term. Again, getting the bigger picture, if we zoom out, we can see that, well, we might be bear weighted, but we're still kind of in a range. If we bump out to a 60-minute chart, we can see that a little bit better, where it looks very reminiscent of some of the other markets we've looked at, where we've had a range for a long period of time. They tried to break out, and it failed. Now we're looking for maybe a correction back down again. So this area is very do or die in terms of range traders. Buyers need to defend this area right now, or at least very soon, or they're going to lose grip. And if they lose grip, well, we could see the same thing that we saw in some of the other markets where it barrels its way right back down to the lows. We do have monthly support underneath us at 81.5 and weekly support at 75.5. So there are definitely some magnets that the market may want to come back to. This range is very sturdy, and it's stuck around for a long period of time. So it wouldn't be a surprise to see the highs and lows of this ping around for a little while longer, unless the buyers really show up strong here. So we're kind of in a do or die situation. Short term, I would prefer to be a buyer, just given the overall movement that we've had. But again, we have the bears in control right now, and until they get out of the way, we've got to stay on the sell side. So an area of resistance at 93.25, monthly resistance at 94.75, and we also have that falling wedge on the top, or falling megaphone, I guess, for lack of better words, coming down as well. So lots of areas of resistance for finding some potential selling areas. It's just a matter of whether or not the buyers want to continue and hold this low and push back up to a new high, or if the sellers are going to take back over and slam it down to the lows over the next couple days. So that's the outlook that we're looking for on tomorrow's price action. A little bit of an interesting one. And looking at the economic calendar for tomorrow, we've got some interesting stuff there as well. At 8 o'clock tomorrow morning, we have ECB President Draghi speaking, and that always has a big impact on the market. So play it safe around 8 in the morning tomorrow, Eastern time that is, because things might get a little bit whippy-slippy. And then if we look at 10:30, obviously, we have crude oil inventories. Now, inventories are forecasted at negative 1.78 million. Negative 1.786 million. Now, we do have the API numbers in just a little bit here, around 6 minutes or so until those come out, and that will give you a slightly more accurate forecast in terms of what to expect. But overall, like we always say, make the plan, follow the plan, trade your rules, and you should be A-okay. Until next time, we'll see y'all then.